The US dollar is drifting lower as traders are still speculating on whether the first phase trade deal will be eventually settled. Another factor behind buoyant appetite for risk is macroeconomic data on China's industrial production, which surpassed even optimistic expectations. Besides, the landslide victory of Boris Johnson in the UK parliamentary election provided some relief to investors. The trade deal is again ruling market sentiment. At present, investors cling to the hope that the long-awaited trade deal could be signed in early January. Moreover, investors believe that the parties are on track to proceed with the second part of the agreement. Meanwhile, investors are in the elevated mood despite disappointment, as actual developments sometimes confounded statements from the White House. The Chinese yuan is now seen as a good barometer of market sentiment. Lately, it has been trading firmly below the level of 7 points against the US dollar. Today, the offshore yuan weakened a bit, though not far from that level. The US dollar is losing ground across the board, including the commodity currencies. On Monday, the pound sterling posts the biggest rise against the US dollar, having jumped 0.64%. The euro is extending modest gains, boosted by post-election optimism. The US dollar index slipped below 97 in the New York trade. The Canadian dollar is taking full advantage of the US dollar's weakness and rising oil prices. The loonie is asserting strength. The US dollar versus the Canadian dollar pair is trading at near 1.3114 on late Monday. At the same time, it would be a good idea to consider buying the dollar-yen pair. The first reason is a growing spread of yields between 10-year benchmark US Treasuries and Japan's government bonds. This is going to prop up the US currency. The second thing is a tax filing period for US companies, which kicks off this week. It means that demand for the US dollar is sure to increase. The interbank lending rate, that is LIBOR, is currently higher than the Fed's official funds rate. In such periods, banks acknowledge deficit of the US dollars and have to raise interest rates to ensure liquidity of the US dollar. In this context, the greenback rose 0.8% versus the yen. The Japanese currency has been weighed down today by weak manufacturing PMI and a decline in Japan's tertiary sector. That's all for now. Thank you for watching and stay tuned.